Well, the greatest bull market of all time is continuing this week. We've seen 6 consecutive all-time highs for the US S&P 500 index, and we've seen our own market, the Australian market, continue to fare well as well. So hi there everyone, welcome to the Traders Circle weekly market update. It is Tuesday the 29th of July 2025, and before I start, you do need to be aware that whatever I say is general advice only. The big news of the week are the trade deals between the US and Japan and the US and the European Union. That's going to see a 15% tariff rate on Japanese imports to the US, 15% tariff rate on European imports to the US, and in return, these countries are agreeing to buy US military equipment and other things. Now, obviously, the markets applauded this, or at least it's risen after these tariff deals were announced. However, keep in mind it is 15% greater tariffs than were in place at the start of the year. So it is really a big increase in tariffs under Trump. And even though it's probably better than some of the more negative potential outcomes, I really do think that the market is perhaps applauding where it perhaps shouldn't be applauding. Now, in the short term, it doesn't really matter. There's heaps of bullish momentum. When this washes through to the economic data, markets will have well and truly moved on from these trade deals, but it will definitely weaken the economic data. It'll lead to higher inflation. It'll lead to more negative other economic outcomes as well. So I don't really see the point of applauding, but I guess the market is perhaps just relieved that it wasn't one of the more negative outcomes. The reality is, though, that what has driven this market rally isn't hope for the economy. It isn't ridiculous expected growth. It's purely US government money printing. These tariff deals don't really change that dynamic, at all, really. They don't change the money printing dynamic at all. What was perhaps more important for the money printing was the big, quote-unquote, beautiful bill from Trump that's just going to increase the money printing, increase the US government deficit, and basically continue to pump up the risk asset price inflation that we've seen. So, yeah, not super important for share prices, I would say, but perhaps quite negative for the economy, although the market didn't take that response. The other big thing for the past fortnight has been US company earnings, and so far the US earnings season has been pretty good, probably better than expected. Every US earnings season is better than expected. It is a rigged game, but this season in particular, we've seen a disproportionate number of beats. I think we're at about 85% beat rate, whereas usually we see about a 75% beat rate. There have been a few standout negative reports, though, and those include a terrible report from Tesla, who's continuing to disappoint on the sales front. Where it has been a really positive season for most people, we did see a big drop-off on Tesla after their earnings results. We're also about to head into an Australian company earnings season. And while the US season has been fairly positive, the Australian season is probably going to be pretty negative. Again, we're not expected to see much earnings growth this season, and that's despite record all-time record high share prices. We're seeing Australian company earnings valuations that are at all-time records as well, completely out of sync with the operational performance of these companies. So this season for the Australian market, it could be a season of reckoning, where we do see a bit of normalcy return to some of the valuations, some of the companies. Maybe we see a bit of profit taking on some of the companies that have ran extremely expensive and that that may not deliver the earnings results this season. So I'll be looking at the bank reports. Obviously, only CBA is the major bank to deliver a half or full year result. The other banks will be providing trading updates, though. I'll be looking at those bank reports. I'll be looking at the insurers, and I'm sure there's plenty of other stocks whose valuations have gone a bit out of sync with their expected reports. So yeah, the Australian company earnings season, it does start next week, although we do have an early reporter in Rio Tinto tomorrow. So those will be interesting to watch. Those companies will then go ex-dividend towards the end of August and start of September. Finally, I wanted to finish up. The next 48 hours are going to be pretty big for Australian shares and for US shares, for the global economy as well. So tomorrow morning, 11:30 a.m. Eastern Standard Time, we're going to see Australian inflation data, Australian CPI. It's a quarterly reading. It's not just the monthly reading. This is the big one. Now, the market's fully penciled in an August rate cut from the RBA. So, if the data is weak, if the inflation is weak, lower than expected, I'm not really sure how much movement there'll be, because like I said, the market's fully priced in, quite a few rate cuts, starting with the August RBA meeting. I'm not sure how important it'll be, given those rate cuts are well and truly all priced in. However, if the data is a bit stronger than expected, I do think there's a bit of risk there. We might see a bit of selling if inflation comes in above expectations. So that'll be Australian inflation, 11:30 a.m. tomorrow morning. Tomorrow night, we've got some big US events. We've got US GDP for the second quarter. That's going to come out at the start of the US session tomorrow night. And if you recall, US first quarter GDP was negative. So if they have a negative second quarter, they will be in a technical recession. However, expectations are for fairly strong US economic growth. And that was after a lot of imports were pushed forward into the first quarter, meaning that there were less imports, especially after the tariffs in the second quarter. And that's going to basically mean that US GDP growth will look more positive than otherwise for the second quarter. So fairly strong expectations for GDP growth there. Like I said, it's probably a bit of a mirage of the numbers, but no doubt Trump will claim some sort of victory based on those numbers after ignoring first quarter numbers due to those import effects. Tomorrow night, we're also going to see the results of the Federal Reserve meeting for the end of July. Currently, they're meeting, deciding on what they're going to do on interest rates, and it's almost guaranteed that there's going to be no change to interest rates at that meeting. Instead, the market will be looking for any indication of rates moving forwards and whether or not they're going to cut interest rates in response to the pressure from Trump. Now, contrary to what it may seem, Jerome Powell doesn't decide unilaterally on interest rates. There's actually a committee that decides on interest rates, and he's just one of the votes on that committee. So, he doesn't get to decide on rates. It's a bunch of him and his peers, basically. It'll be interesting to see what they say about whether they're going to cut rates or they're likely to cut rates moving forwards, because US inflation is quite strong, and it might get a bit stronger given the tariffs and given that the tariff deadline is happening on the 1st of August. So I suspect they're going to basically suggest, they're going to wait a bit longer, they're going to pause a bit longer, and that might call into question a bit more pressure from Trump. Alright, so let's have a quick look at the charts for this week. This is the US S&P 500, and as I mentioned, they saw 6 consecutive all-time highs in a row across the past 6 sessions. That was after breaking through the previous resistance at 6,300. Given that they broke that level, that means that they've, technically they were likely to continue higher, and that's exactly what we've seen. They've rallied up, and they've reached 6,400, which they've sort of stalled out a little bit across the past 2 sessions. So it could be 6,400 is the new resistance level. We're going to have to wait and see if that's the case. They do have this sort of medium-term uptrend line since the April lows, so that leaves them right in the point of an ascending triangle. If they break through 6,400, that should indicate further upwards movement. If they break through that uptrend line, we would expect to pull back towards 6,300. I don't think we'll see too much movement tonight. I expect tomorrow night with the GDP, with the Fed meeting, is where we'll see them break or break higher or lower. If we have a quick look at the Australian market this week, we broke our own resistance, 86.40 roughly, not too long ago. We jumped to a new high of 87.70, found some resistance there, and since then we've been drifting sideways. This is not uncommon for our market. We find a new level and then we drift sideways. So for the moment, our market, even though it is in a sort of medium to longer term uptrend, in the short term it's found a new sideways range. Support for the sideways range to the downside is at 86.40, and resistance is that new all-time high resistance at roughly 87.70. In the short term, we'd expect us to continue to drift sideways in this range until we get a directional signal either from a news event or from US markets. So for the time being, our market looking more sideways, and the US market perhaps stalling at resistance. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.